Hey everybody, I'm Jeff Sailing, co-founder and executive director for AngelNV and for StartUpNV. Again, thanks everybody for coming. So here's what we're going to cover. We're going to talk a bit about StartUpNV, then we're going to do an overview of the AngelNV program, which is a program we're running for entrepreneurs and investors. And then we're going to hear from Greg on the art of storytelling. So if you have questions as we're going along here, please put them in the chat or in the Q&A, preferably in the chat. Maggie is going to sort of wrangle the questions, and when it is time to ask questions, she will speak for the group. If somebody has particularly complicated questions, we'll unmute you so that you can ask it directly. So once again, thanks everybody for coming to our session today, all about AngelNV. So a little bit about StartUpNV. We're a statewide incubator for companies in Nevada. Over the course of the last 3 years that we've been here, we've heard about 450 pitches from companies wanting to join our program. We've been able to help about 10% of those companies, about 48. Of the companies that have been through the program, 16 companies have raised about $40 million, which is awesome. We're really proud of that. The problem, though, is that only about 1% of that money has come from Nevada-based angel investors. And while we're thrilled that 16 companies have been able to raise $40 million in a really healthy startup ecosystem, the early stage money, the first money in outside of the money from the founders and their friends and family, usually comes from the local community. So that's what we're trying to solve with AngelNV. So we have two other programs that do try to help that investor issue. Number one is our own fund, FundNV. That does provide early stage capital for companies that have made it into our incubator for at least 3 months. Then they're eligible to pitch to FundNV, which is our fund for startup capital. More broadly, we've got our AngelNV program, which is with the goal of that is to create new angels in our community throughout the state of Nevada, so that those angels then can invest in new businesses, founders' businesses, just like many of the people who are on the call today. The goal is to create as many of those individual angels as possible, and hopefully those individual angels will also form groups that will either be funds that do investing or do traditional angel group type of investing. So that's the goal of the AngelNV program, is to create that angel investment and to make one investment, at least one investment of $200,000 into one of the companies that's participating in the boot camp and the incubator that we're going to be talking about in just a minute.
All right, with that, the goal of an angel conference is to activate new investors, and we are attempting to overcome two myths. The first myth that we see in communities, every place, all over the country, is that there aren't enough good deals and that investors aren't writing checks. And so to address that catch-22, we found that an angel conference is a great way to do that. My name is Mysty Rusk. I'm part of Angel Gen, and we're here in Las Vegas to help you launch your first 3 conferences. So my partner and I, Judy, who you'll meet in a minute, are here on the ground in Las Vegas helping StartUpNV launch the AngelNV program. And we are looking forward to getting to know all of you, helping you sharpen up your pitches. And we are excited to say that we've committed to working hard to raise a $200,000 investment for the winning company of the conference. So basically, here's how it works. We're working on 4 timelines. We have 4 things that happen. The entrepreneurs track, which kicks off in September and finishes with an application deadline in December. And then the investor track, which kicks off in January and finishes with the finale in March. So the couple of dates we want you as entrepreneurs to be aware of right now are the application deadline, which is December 17th, and the Angel Conference deadline, or the Angel Conference itself, the finale, which will be on March 25th. So here's what happens in the E-Track. Every couple of weeks, we're going to be doing a workshop to help you get your deck in order. We're bringing in some of the speakers that we know, and we're working hard to find speakers here in Las Vegas who can help you get your skills up and get your deck right, because we don't just want you to be able to get a second meeting. We want you to be able to get through the third one. We want you to be able to be asked for your due diligence information and to be able to survive that process. So we're working hard to get you all the way to the finish line to get those investors in place. We're going to do a number of educational workshops. We're going to cover things like how to put a deck together and how to cultivate investors, how to mitigate risks, how to put your valuation together, and how to organize your due diligence documents. And we're also going to do some pitch practice events. Our pitch practice events are organized in a way that we do what we call the 1-minute speed round, or the lightning round. Everybody in the room pitches for 60 seconds, and then we vote. We bring a handful of companies back to do a 3-minute round with their slides, and then we have a team of judges that are investors and technical experts who will pick that pitch apart in front of everybody. The best learning opportunity that we have, and you're going to get a little taste of that today when you hear from Greg Gibson, who's our keynote speaker today. And then at the end of the e-track, on December 17th is the application deadline. And then what happens is we take all the applications and we hand them off to the investors. So you become the way that they learn to do investing. That process starts on January 5th. We're looking for 40 investors to put in a unit each or some combination to be able to get to the $200,000 award that we're looking for. Investors take a look at all the deals, and then they will make a round of cuts. So depending on how many applications that we receive, we may need to do a quarterfinal round, a set of semifinals, and then eventually we'll get down to 6 finalists. The 6 finalists will spend 4 to 5 weeks working with the investor group on a deep due diligence process, and it's a great way for investors to learn, while 6 lucky companies get to spend a lot of time with a pretty large group of accredited investors. And then on March 25th, at the finale, we're going to have all of the companies pitch. The final 6 pitch, the due diligence teams will give their report. The investors will go in another room and make the decision that day. We won't even know who the winner will be until the very end. And then one company will receive a $200,000 investment, provided we're able to move that number of units. And that always feels like a risk the first time, but we've managed it everywhere we've been. So we know if we put the big cash prize out there, that great deals will come out of the woodwork to compete for it. And we know that as those great deals emerge, investors will want to be in on that action and get a chance to review those deals. So this is how we address the catch-22, and this is how we kick off and elevate the innovation ecosystem in your community. And if you don't win, you still have up to 40 investors who've taken a look at your pitch and reviewed your materials. You've had a chance to learn alongside some other entrepreneurs who are doing great things. You get a bunch of exposure for your company, and if nothing else, it forces you to meet a whole bunch of deadlines to be able to get your deck together, to get your financials in order, to get your sales strategy worked out, to make sure your use of funds makes sense, and do all the things that are required to be able to become a more investment-worthy company in the long run. With that, I'm going to hand it over to my good friend Judy, who's going to take it from here.
And you get to come to the finals, even if you don't make the finals yourself.
That's right. So the finals by themselves, the cost for that is a couple $100 or $250, and I'm not sure what the ticket price is. But everybody who applies gets to come to the finals and see the final event. So.
Okay, thanks, Missy. And I'll let you click through the slides because you have control of the slides there from your end. So here are sponsors. The sponsors are local to the Las Vegas area. They're doing business there and they want to support this program. We're working closely with them. This slide showcases our partners, all the different stakeholders, agencies locally that we are partnering with, collaborating with to help get the word out, to communicate to entrepreneurs, and to get them involved in the program. Next slide, please. So basically what we're trying to address here is what's often known as the, I'll say it right away, the valley of death. Startups launch, You have an idea, you work on your proof of concept. Typically, early stage, there are ways definitely to start tapping into some funding through, there are a number of accelerator programs, incubator programs that do provide some funding to help you through the pre-seed phase of post proof of concept phase of your business. There are some resources through federal programs, grants that are available through the I-Corps program, different federal agencies, and friends and family are often very willing to invest in your startup to help you in those first 3 to 6 to 12 months. But then there's always, again, a chicken and the egg issue where you don't quite have enough traction per se. Maybe you don't have your initial revenue. You don't have quite enough validation to start talking to more early stage angel groups, and definitely not ready at all to be introduced to venture capital. So there's always a gap in funding. And we need to, what we focus on and what we try to work on is how do we fill that gap and provide access to capital to startups. And the best way to do that is to engage with angel investors to help them create new angel groups and get them excited about investing early on in these ideas that are past the idea phase, but there's still not quite enough revenue or enough traction to connect with the larger, more seasoned angel groups that are maybe investing larger amounts of funding that the startup's not quite ready for. And we found that the angel conference process is a great way to get investors involved, to get them involved in the local economy, involved in tech startups, and to start making these smaller type investments to help these startups along. So who are the investors that we tap into to invest and purchase a unit in the fund, in the AngelNV fund? It's an accredited investor, so they need to qualify as an accredited investor. They need to be making at least $200,000 a year for their annual income, $300,000 with their spouse if they're married, or have $1 million or more in assets excluding their primary residence. So that's the definition of an accredited investor. In the US, there are 4 million accredited investors that are qualified to fit that definition. There are only about 300,000 of those individuals that are actively investing in startups. And we want to tap into that market, if you will, to get them engaged and get them excited about being more involved and committed to supporting their local economy by investing in these in tech startups within their local region. 26% of the investors are women, 74% are men. Although those numbers are evolving, we've seen some significant change over the last 12 to 18 months. Definitely more women involved in angel groups and angel investing, which is exciting to see. The more diversification we have, the better. And the typical investment in a deal from this very early stage is $10,000 to $50,000. So that's on average. These investors are making, again, this is a national number, 77,000 deals per year. $24 billion is being invested, with a total average deal size being around $345,000. So at the $200,000 mark, we're close to that average. What we found that typically happens during the Angel Conference is the winning startup will win the $200,000, and that will quickly double into a $400,000 deal that will close, because once you've raised that first 200, it's much easier to go connect with other investors to rally and get additional funding to close at a higher mark. And the average valuation of startups in the markets that we're tapping into is about 2.7 million. So again, we're offering a $200,000 investment through AngelNV. We kick off with programming on September 8th. So this session is an opportunity for you to ask as many questions as you want to better understand how the program works. We'll meet on a regular basis to cover major topics to make sure you're completely ready to pitch to investors. Then you need to apply to be considered by the investor group. So there's the programming that launches in September. Then you apply to be considered by the investors on by December 17th, 2020. We start working with our investors in January of 2021, and they will select their top 6 startups that they want to see pitch at the March 25th event. If you're one of the top 6, you get to pitch in front of a large group of people, not only just the investors in the fund, but we invite people to attend from the entire business community. And typically we hope to rally between 200 to 600 people at this event. We'll see whether or not it'll be virtual or a live event. Hard to say at this time. So that's the recap for the program, and I think we have time to open it to questions before we launch into Greg's talk.
And I
Hi, Judy.
see a question popping up from Zach. So Zach is asking, what stage do the companies have to be at? How mature do they have to be? I think I'm seeing that in the chat.
Or what's the group of companies look like? And frankly, Zach, people are applying right now, so I don't have the stats for you.
We won't know what it looks like, but what we've seen other places is we see companies at every stage. We see companies from every industry. And we see companies raising, if you're raising anywhere between 200,000 and 2 million early seed, in the early seed space, this is a good fit. So a group of angel investors participating in an event like this are likely to consider being part of a round. They're willing usually to lead a round. Or they're willing to be the sole investor required to take a company to a next critical milestone. Right, and one other comment I'll make: there's a couple of stats that you should know of as somebody who's raising money. First, on average, based on the history of the last 2 years, on average for successful deals to close, it takes just over 6 months. It will take you contacting, outside of this contest, somewhere between 50 and 60 angel investors or funds that are right for your company, not just random funds, but companies that say, I invest in, fill in the blank with what your business does. And that will get you about 20 meetings, which will generally mean that you'll get one lead investor, and then hopefully from amongst the 20 others that you've met with that didn't volunteer to be a lead investor, those will make up the balance of the round that you're trying to raise. So it's important. This is a real opportunity to kind of get a jump on that. And the fact that this group of angels is going to be willing to lead and do the due diligence means that anybody else who wants to syndicate in on the same terms for more money than the 200 is going to be primed to do that. And we'll have all of the paperwork and assets and everything else that's needed in case that situation arises at the end. And we certainly hope it does.
Okay, a couple of questions that are coming through are whether the companies have to be based in Nevada or have an office in Nevada in order for the angels to consider them.
Short answer to that is yes.
We're pretty excited to run an angel conference in Nevada for Nevada companies.
Right. There's a way, the way that you, if you're not based in Nevada now, there's a really easy way to overcome that. Start your business or start an office in Nevada. Las Vegas, where you happen to see Misty and Raj and I today, and the folks in the room, or in the Reno area, also a popular area for startups in the state, or anywhere really in the state.
And we do know there's some interest from other angel conferences around. So since we've been involved in several, the group in San Diego feels like Las Vegas is close enough. That I think we'll see some investors step over and play here as well.
Yep, I've been talking to a bunch of them in Southern California, some in Utah, some in like the Boise, Idaho, Montana area. So we're getting investor interest from all around the region.
Okay, there is a person named Greg who has a question. Could you type that into the question and answer box, please? Somebody's asking for what are the backgrounds that the investors have, and the answer is they come from all sorts of backgrounds. They can be doctors, they can be pilots, they can have worked in a tech industry or a non-tech industry. They're just people that have been prudent all their lives and saved their money, and now they have the opportunity to explore a new way to invest.
Right. And
If I can add to that, Maggie, what we like to see and what we've seen in prior angel conferences is that we like to see maybe approximately, and what we're getting is about 30% of seasoned investors, angel investors who've done this before for a certain period of time, 10, 20 plus years. And so they have some really good experience in supporting startups in their region. But the whole purpose of the Angel Conference is to encourage new investors new to startup investing to participate, hence the varied backgrounds. In the last conference that we did in San Luis Obispo, California, we had quite a few lawyers involved who had never participated in an angel group, even though they've represented tech startups for many years. But they were excited the opportunity to be on the flip side and to participate as investors. We also see a lot of people who've had successes in very traditional industries and have not been exposed to the startup world. People involved in hospitality, restoration, real estate investment, and those types of industries who are really eager to explore and to diversify their knowledge and their experience in business investments.
And I want to say one more thing about the Nevada thing. Just so, I think probably, I see 71 participants, so I'm guessing that probably at least high 60s of those are Nevadans. And the mission for StartUpNV is to create a startup ecosystem and expand it in Nevada. I worked most of my career in Silicon Valley and in other technical ecosystems in Seattle and Austin, Texas. And that ecosystem that has founders and investors, local investors investing, and founders growing their companies, employing local people, eventually having an exit, and then becoming angel investors themselves. That economic benefit that derives from that cycle is what we're promoting for the state of Nevada. And we expect there's going to be a lot of activity around that in Las Vegas and in Reno primarily, although not exclusively. And that's our mission. And that's why you see the NV in everything we do. StartUpNV, AngelNV, it's all about creating that ecosystem that I took for granted my entire career in Nevada, because we lack it. And it's important that we have it so our founders don't have to leave. The students at UNLV and UNR don't feel like they have to leave, have a career. We want that benefit to accrue to our local economies. So if you are not from Nevada and you like what we're doing here, it's a very business-friendly state. Think about taking your next steps here in Nevada.
So there was a question that Maggie posted to the panelists about whether sole props would be considered, or if you needed to be an LLC, if you could get investment as an LLC or as a C Corp. Judy, that seems like a really good one for you to tackle.
Yeah. So unfortunately, hands down, you have to be, by preference, a Delaware C Corp. If you are on this track, and I see Jeff shaking his head, that's my background as a corporate and securities attorney trained in Palo Alto. It depends on what your long-term goals are. If you feel that for example, if you are a B2B software company and you're going to be needing to talk to venture capital, it is what it is. VCs will typically only invest in Delaware C Corps. So it depends what the long-term goal is. If you are planning to go down that entire pathway and trying to get funding from big venture capital firms, that's the way it needs to be set up. But Jeff, I'll let you, I think you have a slightly different opinion on that.
Yes, so the top 3 states the companies get incorporated are Delaware #1, Nevada #2, Wyoming #3. Both Wyoming and Nevada are making a big push to sort of push Delaware off the top of the mountain with regard to that. A lot of the laws that have specifically been written in the state of Nevada are to address some of the shortcomings on IP ownership and investor liability that have been largely negotiated or litigated in Delaware, but the Nevada the laws in Nevada actually give the investors and the founders more flexibility than the current laws that exist in Delaware. We cost $100 more to incorporate here. That's the downside.
Yeah,
Another
the-
question is,
Oh, sorry.
In our first fund in San Diego, we did fund a company that was an LLC. So it's not that it can't be done.
It's hard.
However, the cost for that is a year later, as she's moving into her Series A, she's having to convert to a C Corp to be able to deal with the venture capitalists. And it cost her $150,000 to do it after she already had investors on her cap table.
Right.
And that's kind of my point. So, Jeff, I mean, I totally agree. If the bottom line is you have to be a C Corp. Now,
Yes.
whether it's Nevada, Delaware, that's totally fine. But my bottom line when I talk to founders is always, what's your long-term goal? If you are going down this path, then do it right from day one. Be a C Corp from day one, and then you're set. And if things work out, awesome. If they don't, whether you were an LLC or a C Corp, it doesn't really matter, because if it doesn't work out, it's not working out. So, you know, make the right choice from day one, and at least you're just set up for success. And it's one less thing to worry about in the long term.
As soon as you raise money from people who don't know you, you should be a C Corp.
Absolutely.
Now, my preference is Nevada, but Delaware, Wyoming, they're all good.
Hey,
So
can I
one
chime
of
in here?
Angel conference is that it's open to debate. There are a million right ways to do a thing. So, and this will be the first of many, many things that we'll see over the next 6 months or 8 months. I guess we've got about 8 months before the conference, where you'll get to hear several sides. And as the business owner, as the founder, you get to have the final decision about how you go. So
I think Greg had a comment.
Yeah, I just want to add, having gone through this a few times as an entrepreneur and thinking about all those entrepreneurs listening, thinking, oh my gosh, I've got to organize my company. I've got to put in the paperwork. I've got to call a lawyer. In my experience, don't worry about any of that, about setting up an LLC or a C Corp or anything else until you have investors interested in investing. Often the lead investor will have a preference for how they want you to set up the company. So I found you really don't need to go to too much trouble. Talk to a few lawyers, have somebody waiting in the wings as soon as you're ready, but you really don't need to hustle and get all that stuff in place, I don't think, to participate in a conference like this.
Right. And I'm going to close it out with this. If you really want to get into the weeds on this topic, we actually have a video on our YouTube channel, which is on YouTube/StartUpNV. It's called Getting Your Docs in a Row. It's a presentation by Craig Macy, who is former Wilson Sonsini attorney, and he operates here in Nevada now. So he talks about all of this stuff in way more detail than we're going to go into today.